All right, Bonked. I think what we need to do, because there still seems to be some confusion as to how I use this. So I'm going to do a little 15-minute overview here, and we're not going to look at any charts. We're just going to draw it out.
There we go.
Cool, that works. Thanks, Mike. So let me just get some blank space over here. Where's blank space when you need them? All right, all right. Sleeping, it's 5:30. Will someone wake him up? Come on. Come on. All right. So say we've got a downtrend. Oh, geez, what was that?
I'm sorry.
Oh, was that you?
Well, I'm logged in, so probably. I don't know. I'm sorry.
All right. Let's say we've got a downtrend. Okay, looks something like this. Got lower lows, lower highs, lower lows, lower highs. Okay, then all of a sudden we get a little bounce, and we create a little higher low. Then we get something like this. Okay. Now here, to me, this is absolutely beautiful, picture perfect ABC. Okay. And this is something that I would look to trade. Now, why is this a good ABC? Well, all of that information is told in your AB leg. So when you have an AB impulsive leg, whether it's upside or downside, the only question that really needs to ask is how strong is that suggested AB impulse? And you answer that by, well, how many previous resistances in an uptrend or supports in a down one did it break? Okay, so we just look backwards. So in an AB, you really want an uninterrupted move, right? And it can jiggle and jaggle and stuff, but when I mean uninterrupted, you're not getting anything like this BC. But a nice uninterrupted AB move, and you answer, how strong it is by how many previous points it broke. So this would be an internal peak. This would be an external peak. This would be an external peak. And there would be another external peak up here if this was, continuing this downtrend of lower highs, lower lows. So this suggested AB impulse here broke an internal peak and two external peaks. It's very strong in my opinion. Okay, a three move, a three peak broken with one internal is very strong. And the reason why this one is internal and these are externals is because you get the bounce off of the low, creating a peak in an uptrend. Okay, so because this ABC broke a peak in the same direction of the plot that the fib plot, this would be an internal. Now, because of these ones are part of this downtrend, these are externals. So we've got two externals, one internal being broken. So now here's what I would do. I would grab my fib, 3-point fib tool, plot my ABC. Whoa, what happened to my fib colors? Let's change that. Okay, there we go. So when I have my ABC plot, here's where the trade happens. Now, when you have an internal peak being broken, you essentially can just buy it at X on the way through it with a stop below C. And how I would manage the trade is I would sell half at P midpoint here. I tried to do a 1/2, but that didn't really work. So I would sell half at P midpoint, sell half at P2, and sell half at D or the final position at D. The other part of the trade is when you get a move past the P midpoint and a retrace back to X, that would basically have me rebuying my full position again, especially if I sold half here at P on the camouflage trade. I would buy back to full position at X, and still stop goes below C. And then I would do the same thing again, sell half at P, sell half at P2, and then half at D. And sometimes you'll get multiple entries at X. It'll just kind of do that sometimes. And I'm happy to keep buying at X and selling half at P2 or P midpoint and buying back to full position at X. I'm perfectly happy with doing that. So there's essentially the mechanical and the camouflage trade in a nutshell. It's really not that complex. It's very, very simple. Don't A and C usually go against the prior trend and B goes with it? Loosh, it's all just impulse and corrective legs to me. That's thinking a little too complex for me. Technically, with that method, you're always playing wave 5. Not necessarily, Dooley. This will work in any wave. This will work in 1, 3, 5 impulse or 2, 4 corrective, because what the ABCD actually is an Elliott wave 3-wave sequence. Okay, but instead of, this is how I'd call this an ABCD. AB equals CD. Elliott wave would label this actually as A here, a B here, and a C here. So it really is just the 3-wave Elliott sequence. And the reason why I call it Elliott wave light is because instead of looking at the market in terms of 5 waves, I'm just looking at it in 3 waves, and it simplifies it amazingly. It just tremendously simplifies the way I view the market, and it also gives me a way to trade it. And I can trade it without needing to know the Elliott wave count. I don't need to know what Elliott wave count it is. It does not matter to me. Elliott wave people are poor. Yeah, Elliott wave is tough. The only thing I was waving with Elliott wave was goodbye to my money. And that's just my own truth. I lost more money than I made when I was trading and counting Elliott waves. It's just that simple. It wasn't until I started trading this ABCD pattern that I actually became profitable. And with it, I stopped counting and, stopped caring what Elliott wave we're in, because it just doesn't matter. Well, the problem audio is, it's very subjective, right? I mean, there's no, simplified rule structure of, how do you trade Elliott wave? Well, you always want to trade for wave 3s, right? Well, how do you know which one's going to be a wave 3? And you don't really know until it's kind of after the fact a little bit. They're just, for me, Elliott wave was it was too subjective. It was too much, changing of the counts and all that kind of stuff. It just didn't work for me, man. I mean, I'm not saying Elliott wave is bad, because I know some amazing Elliott wave technicians who kill it and who crush it. But for me, I'm a simple man. I kind of like to simplify things. I'm a very big fan of keep it simple, stupid. And this really, really helps me keep it simple without ever having to, know or care what Elliott wave count it is. I'm not selling any course, man. I'm just talking. I mean, I've been trading this way since about 2014, and this is the only thing that actually got me to profitability. What's the best time frame? Well, I like to use this in all time frames. That answer is really only, that question is really only answered by you. It's not my time frame that's important. It's your time frame that's important.